I purposely delayed these videos because I wanted to see how the 6 o'clock open would develop. I just wanted to see where the market would be after the weekend. There's been a lot of news that came out specifically as it pertains to sanctions. There's some Powell news, as well as there is some oil news that came out. So with that being said, let's get started right away with oil. So we're going to try and keep this short and sweet. Okay, so what happened this weekend with oil? So there's been rumors coming out now that potentially there may be sanctions levied onto Iraq. And you're going to say, Iraq? What does Iraq have to do with anything? Well, it's starting to come out now that Iraq has been helping Iran smuggle oil out and to sell their oil. Iranian oil is under sanctions. So by Iraq helping Iran smuggle out their oil, the U.S. has been starting to get ready to threatening to throw on sanctions onto Iraq for this, as well as tie up about $350 million worth of revenue from their oil. So there is sanction news out there. So the question you're going to ask, though, is what does that have to do with the rest of the week? Why was it that all this bearish news came out? You had OPEC increasing production. You had the EIA coming out and saying, even though the summer, it looks like the fundamentals are a little bit more bullish, so prices should go up. Over time, though, supply is going to outstrip the demand, so that's really more bearish. You have the forward curve is bearish. Why did prices go up? So a lot of it has to do with the fact that there's a lot of uncertainty out there, whether it be through tariffs, whether it be through sanctions, whether it be through some short-term bullish fundamental drivers that are really, to a large extent, keeping oil relatively quiet. Now, you're going to say we drifted up. We did. We opened last week at 65. We're now at 68. We've really kind of drifted up. We really haven't gone anywhere. As much as it's been slow and grindy, it's been very, very subdued. Volatility is subdued. The volume is subdued. So that translates into a lot of uncertainty. People are not really putting capital to work in either direction or making big bets in either direction because there's just too much uncertainty out there. I don't believe that the market is going up to this 78. I think that's a pipe dream. That's not going to happen. However, I originally was under the impression that we would be somewhere here this past week, between 60 and 65. Obviously, that didn't work out, but we haven't really pushed. So when we opened up a week ago, we opened up around 65, I think that night, something like that on Sunday night, about 65-ish. And we're only at 68. So we really haven't gone anywhere. So really after a week, we went nowhere. Granted, we did grind up, but we're not really moving with authority. I think it takes one headline or some type of news event to propel the market back down. I don't think it takes much. I think the administration is probably not happy with oil at 68. They may start putting pressure, some kind of pressure, whether it be threats or something, and that potentially could really push things down. I foreseeing, based off the volatility, that there's going to be one day, I don't know when, that there's going to be one day where the market's going to move $3-4 in one day. And you're going to think that it's bounceable and tradable from the long side, and the market's just going to run you over. It's just going to go, there's going to be one day where it's going to move anywhere from $3 to $4 in one shot. So just be on your toes and be ready for it. I don't think it's to the upside. And I know I sound like I'm talking my book, but I think it's to the downside because really there's nothing fundamentally that's supporting prices up here. So just keep that on your radar. Okay. Let's move on to some other things that are moving. Natural gas. I know I said things that are moving, but this isn't really moving. But the reason why I'm bringing it up was natural gas has been really this summer, I would probably say the most disappointing commodity out of everything. And then after this, I'm going to speed it up a little. The reason being is they were expectations of a warmer than usual summer. That didn't happen. We've had injections that have been a little bit more on the bearish side. So a lot of things that were originally in my mind for a $4 to $5 range, so far for right now are pretty much off the table. Now, natural gas has been grinding lower. We're gapping up about 3.5% tonight. 3.25%. But if you really look out at it, it's really doing a whole heck of a lot of nothing. So I would advise you could look at it, but I wouldn't waste too much time. I don't think right now there's nothing there. Obviously subject to change, but for right now, I don't think that there's much happening. Let's go where the action is happening. Okay. So I'm going to touch upon this for a second. Copper. So what moved copper is 50% tariffs on copper imports. That's really what ignited this whole move. And this whole move, this is a daily chart, but this really didn't happen until like the last couple of minutes of the day when this news came out. Copper since then has pretty much done nothing. I think if you're trading this, you better know this market inside and out, because as quickly as we went up, we could fall right back down just as hard, if not harder. And if something else happens, then this could rip to the high, roar past this high. However, I think that the threat of tariffs on this particular metal is what's keeping it rather held up here. I think it just takes one backtrack, one headline, and this thing could be right back down to here in a second. So just be on your toes with it. Okay, I'm not going to really spend too much time. Okay, platinum. Platinum got up to 1477 during the RTH session. It got up to about 1473. It just keeps going. It's very hard because it's been very choppy, but again, it is moving with authority to the upside. It's just doing it in fits and starts. So I would say be careful with it. Gold, really doing anything. I'm not going to lie to you and tell you that it's been amazing. It's just not. It's just very much up, down, up, down, up, down. It's just really not doing anything. I wouldn't waste time there. Silver woke up. We'll see if this holds. Some of the more industrial metals, silver, platinum, palladium, they're all waking up. They may be more in play than gold. So just keep those on your radar. Grain markets, soybeans, they've been melting. Wheat, doing nothing. Corn, melting. But a lot of this stuff is really going to be more related to sanctions and tariffs. So just be aware of it. Just be careful. The ones that were in the news, I know a lot of you don't ever trade them, but the ones that were in the news today that really had big moves, I have coffee up, and I'm going to start a different way for a second. I'm going to start with orange juice. Are you going to say, what? Yes, orange juice. When the Brazilian tariff news was announced, orange juice jumped almost 14%. So let's just go here for a second. Okay. Orange juice jumped 14% off this tariff news. Okay. On Brazil. Now, I know you can't really trade orange juice, but it's something to just keep in mind with what these tariff headlines could do to a commodity, depending on what the commodity is. So right now, orange juice was melting. And then all of a sudden you had this tariff news, and off to the races it went. Like I told you, the day of the tariff announcement on Brazil, it was up 13.5%, something like that, 13.5%, 14%. This could really ignite it. Really, really ignite it. When we go to coffee, which did wake up, it didn't really explode up, but it did wake up. It's been melting and making multi-month lows, but it did stabilize. Now we'll see how this plays out, but you have to be careful, really, really careful. I just want to bring it back up to oil for a minute. You really have to be careful now. We're in uncharted waters for a lot of things because of tariff announcements, sanctions, but it's really tariff tape bombs. I'm going to talk about this a little bit more in the equity side of things, but I want to say one last thing in closing. The difference between Trump 1 and Trump 2, in Trump 1.0, he used to do a lot of things at 7:30 that were very company specific. He would send out tweets about Boeing. He would send out tweets about IBM, whoever. And he could literally destroy your share price by 10, 11, 12% just on his tweets at 7:30 in the morning. That's not happening this time around. He seems to be going more after not necessarily commodities because they're not companies, but this tariff sanction news has really been driving things. And it's really running amok in the commodity space. It's making things very, very difficult. A lot of people are very unsure how to commit long-term capital and to hedge and to do certain things within the commodity space, whether it be on the spec side or the commercial or the producer side, because of this, and long-term money, whether it be funds, etc., are having a very hard time understanding which way to go. Meaning you could be 100% right, but all it takes is one stupid tweet or one stupid headline or one stupid press conference, and all of a sudden things are moving and going places you never thought were possible just because of the way this whole thing is playing out. You have to be a little bit more careful. You have to be a little bit more deliberate, and you have to wait for your trades to come to you. Don't push them. When they're there, you'll get it. If it's not there, don't push it, because you could get hurt very, very easily. Thanks for watching, and I'll see you on the next one.